We've been investing in the Netherlands since 2002. It's one of our largest markets in Europe. We as a company have a focus on Northern and Western European economies, which I suspect is a very similar story for many international investors in Europe. One of the primary drivers of that is seeking markets which have a good level of liquidity, good solid real estate foundations. And this is something that we find in the Netherlands. There's a good rule of law, there's a relatively stable political system, relatively stable taxation system. So these are all trends that lend themselves to a good investment market for us, and I believe why we've been there for the best part of 16 years now. Most recently we made an investment in a large portfolio of DIY retail boxes in the Netherlands. This was part of a wider corporate transaction, which added an element of complexity, which I think several other investors might have shied away from or not been able to deliver on, and I think that gave us a little bit of a competitive edge in that transaction. But our interest in that investment lied substantially in two things. Firstly is a market-leading tenant, clearly the market leader in the DIY sector. And we see the DIY sector as quite defensive and resilient to the effects of e-commerce. And the second was the real estate itself, which covered the entire country of the Netherlands, with a primary focus on the Randstad region, which, as we know, is an economic powerhouse within the country. And through that, we have sites which are in excellent locations that lend themselves not only towards DIY retail, but taking a very long-term 15, 20, 30-year view. The underlying real estate value is there. Hopefully as DIY retail, but perhaps even as click and collect, as last mile delivery, or even conversion in many years' time into some other asset class such as residential, which, as we know, is having a strong growth with the demographic trends in the Netherlands.